Who's our guest?
Well, back by popular demand, we have Wolf Richter of WOLFSTREET.com. You can follow him on Twitter at Wolf on Wolf Street. He's also we're talking to him from the land of Wells Fargo. Welcome back to the show, Wolf.
Well, thank you, Tom. Thanks for having me on your show.
Wolf, I was reading some of your articles. I don't know where to start. I've been ranting on the Fed for 2-3 days. Seem to be a few people doing some ranting with me, including you. I don't see how they ever have the stones to come out and say this was all a mistake. We need to go the other way. I don't see this group doing this ever. So where is it going to lead us? To your article about about the bubbles and the crashes and everything else?
Yeah, I mean the Fed and other central banks, they have undertaken these super duper emergency measures to bail out the financial system, and it's supposed to be short term. Now we're in the 8th year of this. So there's nothing short-term about this. And when they started doing this, they had probably no second thoughts about the consequences of it. And now that we've taken a short-term emergency measure and made it the new normal, the consequences are enormous. And the Organization for Economic Development and Cooperation has now issued a warning. And, there's a lot of other organizations that have issued warnings about this. Including the Bank for International Settlement, and which is sort of a central bank organization for the other central banks. And they have these rogue economists that are essentially saying, look, you guys are creating asset bubbles, and the smallest thing that goes wrong will cause a major repricing of those assets. And this will cause all kinds of upheaval in the financial world and elsewhere. And so these reports are now piling up. And the problem is that these assets have been valued based on long-term interest rates being very low, and in some countries close to zero. They've been pumped up by this additional liquidity that's going into the markets, and that stocks, its bonds. I mean, European bonds are crazy overvalued. That includes real estate now in some major markets. And so the risks that are piling up globally, and this is global, this is not real estate in San Francisco, which is crazy, but this is global. And the worst bubbles are in Canada, they're in Australia, they're in these kinds of places. And so now what are we going to do? And, the Fed will never say we made a mistake, like you said. I mean, that will never, ever happen. But they're trying. I think they have an idea that this is probably something we ought to somehow walk away from, somehow, but they can't figure out how.
Well, if I do what I'm not supposed to do. I guess maybe I've always done that, but I'm never supposed to look at money supplies anymore. Who told me not to do that? Was it
the Fed?
Bernanke? Somebody, one of those guys,
told me. When they stopped printing the M3?
Yeah, when they stopped printing M3, I'm never supposed to look at it, but I do. They are not only, they have been in this high 6 to mid 7s, recently mid 7s growth in M2. All of a sudden now, when everybody thought, well, I don't know when everybody thought they might do something in September, they're up to like 8.5. I mean, they're going the other way. I don't, to be honest, they could nudge that number down 6.6, 6.4, 6.3, and at least bring us back somewhere to normalcy if they wanted to, without even telling anybody. Because I do believe I'm the only person that looks. I say, but why are they going the other way? Is it the total inability of the 5? I'm going to say limousine academics. Can they just not push back against the bankers at the table? Because to me, for small group dynamics is what I did in college. It all comes down to the reason why after the 2008 crash, the bankers were in the room and they basically carried the day and said, you got to fix us first. And if you do, everybody else will be better. Because you just can't let us go under, because God, nobody can even think of a world without big banks. So they fixed them first. Much as in a MASH unit, you fix the guy with the loudest mouth saying it'll help you fix the other people. But now they're still doing it. I don't know how they can push back here. But to me, they're getting more extreme as the economy allegedly mends, not less.
Right, and the interesting thing now is that even the bankers are squealing. the traditional bankers, those that have to make money based on traditional banking, because they can't really make money in this environment, especially in places where there are negative interest rates. The yield curve has flattened out, and banks borrow short and lend long, and they make the money on the difference. And if the yield curve is flat, there's no margin for them in it anymore.
Well, I'm going to ask you a question. Can I push back a little bit there? A lot of bright people say that on TV all the time, and radio, and in the financial press, and I certainly include you in the very bright people category. To me, that's absolute BS. They're charging people 24% on credit cards, for God's sake, and they're getting money for free. How do you?
Except that people are deleveraging.
I
Those
understand
revenue
that.
streams from the credit card.
And you're totally right. I mean, I own a small business, and I know what Wells Fargo wants to charge me for my loans.
Yeah,
and
that's what I'm saying.
It's ludicrous. But you got to remember that that's only a small part of bank lending. So when you look at mortgages, and you look at car loans, those are the biggies. And there's over $1 trillion in auto loans outstanding. There's, $15 trillion or so mortgage loans out there. Those are the low interest rate loans.
I agree.
On the credit cards, you get ripped off. And I don't get ripped off because I pay them off, so I don't pay that interest. But if you're one of those people who can't pay off the credit card, you are a sitting duck. And the banks know that, and they rip you off.
Well, I have
and that's where they make the money.
I have a couple of, shall we say, acquaintances in the auto business that deal with, shall we say, not you and me walking into the bank and they're
unprime.
Unprime. They're 11, 12%. They're not doing these people any favors.
Yeah.
I mean,
every time you have a weak borrower out there in this environment, people that need money, they'll pay the price. The people who don't need money, like a big corporation issuing bonds to buy back its own shares, they don't need to do that. It's an option they have. They can borrow at almost nothing. And in Europe, they've issued bonds at negative interest rates, at negative coupon, negative interest rates. And so it's ludicrous. On one hand, people that don't need the money, they can borrow at very low interest rates. And people who really need the small businesses, if you're a small business and you need money to start a new operation or to do something, to buy some equipment, you pay out of your nose for this.
Well, Wolf, how much?
That's the distinction we have today. The bankers make money where they can, and they can make money in subprime, and they can make money with credit cards, and they can make money with small businesses, and they'll charge an arm and a leg for those loans. And where they can't make money with the big corporations, then you look at leveraged loans. These are chunk-rated companies that issue, junk bonds, and they also issue loans. And these loans are so risky that banks don't keep them on their books, and they sell them, and they syndicate them, and they turn them into collateralized loan obligations. And the average yield on these loans is just minuscule.
Okay. Right. Well, how much of and I don't know the workings of it as much I'd like to, how much, if any, let's put it that way, without leading the witness, is the Fed working against himself? On the one hand, they're keeping rates real low so people theoretically can give loans, but yet their worker bees are out the banks telling people don't give anybody any loans because they're too risky.
Tom, I lost you.
I'm saying is how much of is the Fed, the regulatory part of the Fed, actually telling banks to not give out loans, even though the governors are keeping the rates low so people do give loans? In other words, are they working against themselves, the regulatory side versus the, shall we say, the policy side? And
the Fed has gotten really worried about leveraged loans for a couple of years now. These are the big chunk-rated loans, and they've told banks to cut back on those. And because they blew up during the financial crisis, and the banks got stuck with them. And so the banks are worried about high-risk loans that banks are undertaking. They're not worried too much about car loans. It seems there's reasonable collateral on them, even though there's huge losses involved too. And the OCC, one of the bank regulators, has complained about subprime auto loans. I mean, that's an issue. I don't know. There's $1 trillion in car loans out there. If 20% of these balances are subprime, that's $200 billion. So and if the loss ratio is 50%, you're looking at a loss of $100 billion spread over the financial system. So it's not like a mortgage crisis. but it's a significant risk out there. And so the regulators are pushing the banks on the high risk stuff to be more careful. And of course regulators. The banks own a big part of the Fed, and the other regulators are sort of, they're doing this as kid gloves. They're not really cracking down on the banks.
Well, on a personal level, can these central bankers, if they realize, or maybe they already have, or if they do, if they realize the policy just plain isn't working, are they capable on a personal level to back off it and say we're going to try another direction, or are they absolutely committed to drive us all into the hole with the policy?
Yeah, I look at Greenspan, and now that he's long retired, he's starting to sound a little more reasonable. So I think that's the pattern. 10 years after they retire, they might start having doubts about their policies, but not while they're in office. I think if they have any doubts, they're going to keep it to themselves. And I just haven't seen a top central banker while in office question what they're doing.
Well, the guy in Japan has to be. We have to head off the break, or you can hang through, I hope. The guy in Japan here has to be wondering if he's doing anything correctly, because everything he's doing is totally backfiring on him.
I think he's thinking that it would work. Bob will keep that through the break.
SP futures down 350, Dow futures down 22, S&P futures down 9. We'll be right back. Stocks and Jocks. Stocks and Jocks. Tom Houch, Miss Kathy Durbin, Mr. Matt Weber on the board. SP futures down 350. Hard for me to say down, man. We're up every single day, it seems. Dow futures down 20.
I still think it's a mistake.
Yeah, the futures down.
Computer issues.
Down 850. Again, the news this morning, which isn't doing anything in the oil market, is, and it might have broke yesterday, calf later, but Saudis say they will cut output if Iran agrees to a cap. Nobody says what the cap is. I'm sure their idea of the cap would be less than Iran's. Iran would love to have a cap at the most they could ever produce. And they'd say, we'll agree to it, right? Mm-hmm. So it has to do with the price.
Help us help you.
Kath, how about reintroducing our guest?
Well, we're back with our guest, Wolf Richter of WOLFSTREET.com. You can follow him on Twitter, Wolf, on Wolf Street.
Wolf of Wolf Street.
Thank you. I do that every time. Wolf of Wolf Street. Thanks, Wolf. Thanks for hanging with us.
Well, thank you.
Wolf, I was doing a little research last weekend, not in a bar either. I mean, I was doing some research. I can't get over, Wolf, as I remember part of this because I was young, so I don't remember all of it. God, this reminds me so much of the mid 70s where we're pouring money into the system, ignoring it, any type of inflation, blaming it all on the Arabs, and all of a sudden we just had it. And we had a guy like Milton Friedman in his young days running around telling the Fed that you're the idiots that are causing it. Why are you so incredulous? And we're doing the exact same thing, and we expect a different result. Don't these people read anything now, or what?
It's amazing how how these central bankers sort of live in their own construct. It makes you wonder who they're really doing this for. And we know that the official reasons that they give is it's just sort of a smoke and mirror construct that's built up, and there are other reasons why they're doing this, and I think we've discovered many of those reasons in the past.
What do you make of the Japanese situation where they own? I had some people tweeted in the other day. They own 38%. Central bank owns 38% of the government bonds, on their way to 50 by the end of the year, and they own 15-20% of most of the big companies now. Even in a society that doesn't like confrontation like theirs, well, somebody's got to be sitting at that board meeting going, what are we doing? I mean, when we get to 60, are we going to win? When we get to 70, what if we get them all? I mean, then what? How does it even going to look?
Yeah, Japan is in a peculiar situation. The economy is actually doing pretty well when you look at it on a per capita or a per working age person, and they have a declining population, and they have a rapidly declining working age population. So the overall numbers are always weak. They will not be able to change that with the demographics. But on a per working age person, the economy is doing pretty good, and they have the highest per working age GDP in the world. and they have by far, and they have one of the highest, or maybe the highest, per capita GDP growth rate. So, I mean, that part of the economy in Japan, when you go there, and my in-laws live in Japan, so we go there quite a bit. The economy itself, on a individual basis, is not doing badly. But what they have done is, and one of the reasons why the economy isn't doing badly is because of the enormous government stimulus that they've been doing for years, many years, and the deficits of the government are just enormous. There are many years they've had to borrow 50% of their budget or more. And that's huge. It's a huge amount if you have to borrow half of your spending. And so they have accumulated this enormous pile of debt. And everybody in the world knows that they will never be able to service this at anything like normal interest rates. They can never pay back. They won't be able to roll it over if interest rates rise. And so what the Bank of Japan is doing is essentially monetizing that debt. And what the Japanese don't like is chaos. And so they're not going to go through a debt crisis. They're not going to have chaos. They're doing it in an orderly manner, and I think that's a decision. They don't talk about that, but that's how I see it. They are buying up the debt so that they can control it, and so it will show up in the currency. It will eventually show up in the yen. You can't do this forever for nothing. So there's a price to pay, but it won't be a chaotic debt crisis like we've seen in Greece. It will be a gradual deterioration of the yen. It will probably be like watching paint dry. There'll be ups and downs, but it'll take a long time. And so I think that's one of the reasons why they're doing this, because they're in a fiscal hopeless situation. They're right now the Bank of Japan is buying every Japanese government bond essentially that the government issues, plus it's buying everything that's not nailed down that's already out there. So, like you said, by the end of the next year, they're going to own 50% of all the debt out there, government debt. In 2018, 2019, 2020, they're going to go. They're going to keep doing this, and they're going to go to 60 or 70% until they know they have enough control over the market to where there won't be a debt crisis. Well, there might be a yen crisis, but there won't be a debt crisis. And I think that's the strategy that they're following. I mean, because it's just hopeless.
Well, we have, I think, some QSIP numbers here. The Fed owns 40-50% of our stuff. And we've had the Draghi, I think, maybe has a little more common sense, or does not think that the plan you outlined Japanese are doing is going to work. I think he's slowing down a little bit because he's running out of stuff to buy. I guess I don't. When the government buys, you would never give. I think most people, if they put a constitution together, you would never give your politicians the right and privilege to just have a printing press and spend whatever they damn well felt like. So we make them go through the iteration of borrowing money from the population, and if you have a Fed to manage the money supply, they can buy and sell, which makes some sense to me. But if your Fed just says, the hell with that, and turns on the printing press and essentially buys, you go out and you borrow money from the U.S. population on Tuesday, and CAF turns on the printing press on Wednesday, and buys it back from the population, you might as well skip the intermediate step and give Goldman the money and the commissions both ways and let them front run. Why not just have CAF turn the press on and you spend it? Yet nobody would sign up for that, I don't think.
Well, if they described it that way, they wouldn't.
No, but I mean, isn't
so
that...
you throw a bunch of jargon at that.
But isn't that what's really happening, or where am I wrong?
Yeah, I mean, when you look at a central bank the way that, for example, France had it before it joined the euro, there was a government agency, and the government issued debt directly to the central bank. And some of this would be sold, some of this would not be sold. And so it was just printing money, essentially, without the intermediary step. And a lot of people are saying, well, why pay commissions to these bankers that sell these bonds then back to the central bank? Why not just do it directly? And I can kind of see that.
Yeah, me too.
Lose money. Why don't you do it directly? At the same time, this whole concept of a central bank coming in and mopping up assets is just insane. I just agree.
Well, but you would never say whoever's elected president gets to print money and spend it. For God's sake, boy, talk about Santa Claus and Daddy Warbucks combined. I mean, nobody would give anybody that power.
So they have to call it something
So
else.
they have to call it something else. Wolf, thank you very much. Ask Wolf where we can find him. We said
Yes.
earlier.
Wolf, tell us and our listeners where we can find you and all your great work.
Yeah, you can read all my stuff on WOLFSTREET.com. It's free. It's not a newsletter, so you just go to it, WOLFSTREET.com, and we have 1 to 3 posts every day.
I've read like the last 5 of them. Every one of them is terrific, so
And
I
a lot
would
of
really
your stuff,
recommend.
yeah, it gets reposted on Zero Hedge. So if you don't find them one place, you can find them on the other.
Wolf, we'll have you back, but it's always a pleasure.
Thanks very much.
S&P futures down 375, Dow futures down 15, NASDAQ futures down 950. What'd you think of that, Kev? Interesting stuff.
You know, it dawns on me we let them get away without asking about Wells Fargo, but that's okay. 'Cause, Japan is...
Yeah, we did.
Japan's always a great story.
But you know what? As bright as he is, and he outlined the problems and what they're doing, I mean, better than I could have.
Yeah.
Nobody knows how when it ends.
No.
What happens?
Well, the smart people admit they don't know how it's going to end or when. There's still people out there trying to predict it.
Someday they'd say we'd love to buy more government bonds, but we have them all. I can't imagine what that day would look
Illinois
like.
will keep churning out.
Yeah. They could start buying ours over here. They could start buying our Chicago Public School bond. But I mean, that day would be quite a day. By the way, there aren't any left. SP futures down 4, Dow futures down 15. We have Mr. John Neal after the break. Be right back.